So financing contingencies. What do you need to know about them? We're going to talk about that here in the next couple minutes. Hi, this is John DeHart with the Homes from DeHart Real Estate Team, powered by Keller Williams here in McLean. And we have our preferred lender, John Pine with Atlantic Bay Mortgage. He's here today to talk a little bit more about financing contingencies. So, John, thank you for being here.
Thanks for having me.
We're having, a robust year in 2024. And in 2025, we're expecting another robust year where lots of contracts will be coming in, most likely with the minimal amount of contingencies in there. One of those contingencies in a contract is a financing contingency. Now, John, as an agent, I never want to see any contingency as a listing agent if I'm representing a seller.
Of course.
Now, we also represent buyers as well. Mm-hmm. So in these certain situations, one of the goals that I have is to try to get that financing contingency out of the way.
That's right.
How do you do that?
Well, the only way to do it, John, is with a true upfront underwriting.
Okay.
And the way we do that is we get a full loan application. We start building a borrower profile. We actually go through the underwriting process where we're looking at income, assets, and credit. And we can get all of those things knocked out up front. So really, once we're under contract, the only things we really need to do are order an appraisal if one was required, obtain title work, an insurance policy, and typically we need to re-verify employment before closing.
Okay, so that's great, because one thing that we've always found is that sometimes people are just casually looking online.
That's right.
And they see a house and they're like, oh, well, let's go make an offer on it.
That happens all the time.
Well, in this situation, we're a little behind the eight ball.
That's right.
Right, so the goal is how soon in the process should you actually be getting that approval so you can more or less write that write that offer without that financing?
I would say the earlier the better. If you're thinking about buying in the spring and we're talking in the fall, I think it's time to get your ducks in a row right now. Start talking about what you need to do. If there's any actionable items that need to happen, if there's some debts that need to be paid down, if you need to obtain some cash by maybe taking out a home equity line of credit on your current home, there's things that you can start doing now, and we can put you in a position to succeed. And inherently, if you wait and you don't do the true underwrite up front, you're typically closing in 30 days, right? Yeah. During that 30-day period, you're dealing with home inspection, you're working your job, family life. If you're doing the heavy lifting and providing all those documents, it can be a much more stressful process too.
So let's assume for a second that you're in a position where you're approved, you're pre-approved, but you're not fully underwritten.
That's right.
Tell me the difference between that, because I think that's a big difference. I think that's a really important fact that needs to be told.
And it's one of those things, and it might be hard to tell from an approval letter. When you look at those things, when you get a true approval, it means that an actual human, an underwriter, has verified your income, your assets, and your credit. Mm-hmm. It's not based on what you've submitted to an online loan application in many cases.
Right.
These things have been verified, checked, and a physical approval has been issued. That's the difference, John.
So in this case, it's almost like you don't have to worry, you're going to get the loan.
That's right.
Okay, so that's a major fact here, guys. You need to realize that when you get a pre-qualification letter, that's like the sniff test.
That's right. It says based on what you've told us, it sounds good.
Right, so it's based on the trust factor and, it's really based on, them just being honest. You do approval letters all the time.
That's the way that I do it every single time.
So what we want is not only as a listing agent, but as a buyer agent representing a buyer, when I write an offer that's non-contingent on a financing, I want to make sure that, there's no chance in God's green earth that thing is going to fall through on financing. Because they're going to lose their deposit. B, they could get sued. And that's a bad situation.
That's right.
So what you're saying is go for the fully underwritten pre-approval. It takes how long? How long does that take?
Depending on the complexity, it can take anywhere from 1 day to 3 days. Typically is what we're looking at.
So you're saying a couple days, get that done, and then you don't have to worry. You're going to get the loan, assuming that you get to keep your job.
Yes.
And you don't go out and buy a bunch of stuff.
Yes, that's correct.
Okay.
Basically, what we do up front is we vet the borrower. And then once we're under contract, we vet the collateral, meaning the property that you're buying.
Okay. Well, guys, if you have any questions about that, I'm going to put John's information here on the screen. And I think this is a really big deal. I think we should take this into consideration. If you're looking to buy a property, We've already done several of these here, at the end of 2024, in hopes that, our buyers will be buying at the beginning of 2025. So if you're looking to do that, you definitely need to talk to John about it. I think he's a great resource when it comes to making sure that there's less stress and making sure that when you get that loan approval, that you're going to get that loan, right?
Yes, sir.
Okay.
That's the whole point.
Well, thanks for watching, guys. And remember, homes where DeHart is. Have a great day.
Thank you.